How's it going, everyone? This is going to be a video over the next day model or the next candle model, or simply using the previous candle to anticipate the next. This is going to be very similar to my daily bias video, but with some slight differences. So let's get into the PDF. So the first thing we need to understand, and this is directly from my daily bias video, so if you have any confusion, please go check out that video. I'll link it in the description below, is defining a reversal versus a continuation. With defining a reversal, I focus on price taking out its previous candle's high or low, and then closing back into the range. This allows me to anticipate the following candle to have a continuation. So if price has a bearish reversal here, there is a bearish continuation following, or a bullish reversal here, a bullish continuation following that. Now with a continuation, I am anticipating price not to reverse as it took out its previous candle's low and closed outside. So if I'm anticipating price to continue, then we would just continue lower. So you can see here, we close over our previous candle's high, and then we continue in the following candle. So let's take a look at this before we get into some TradingView examples. So you can see here, we have created a range. We fail to close over this previous high. We go to this low. Here we failed to close below this swing low, and then right here we have closed over our previous candle's high. So with what we just learned in the previous slide, I would be anticipating a continuation higher on this day. We have now closed over our previous high once again, so looking for a continuation higher. This is where there is a little conflict. We have taken out our swing high on the left, however we have also closed over our previous candle. One of those is telling us bearish, while the other is telling us bullish. So with this, I will wait for another candle. Here with this candle, we do have a nice bearish candle, but we have not closed over our previous high or low. So now here on the next candle, we have closed below our previous candle's low, so I'd anticipate a continuation lower. Now after this continuation lower, we look back and we have had 3 days of expansion lower, which generally indicates we can enter a new phase of price, being retracement, consolidation, or reversal. So here we can look for the next day. It either goes lower and I miss it, or we get a retracement in which I can look to get onside on the following reversal. So here we have an inside bar. It does not give us any more information, so we let another candle form. Here on this candle, we reach into a point of interest with this fair value gap. We're also closing the body below this opposing candle or this order block, and we are closing inside our previous candle's high. So if we have a reversal here, I could anticipate a continuation lower on the following candle. And you can see this continuation occurs and continues lower as it continues to close below its previous candle's low. So let's hop into a few examples of this on TradingView, and we'll also take a look at the lower time frame price action, as well as getting onside with these moves. So here we are on the daily chart, and we're just going to work through some of this to go over the fail to close outside the range or the close back inside the range. So you can see here we have closed back inside the range, so I would anticipate price to go lower the next day. Now with this move lower the next day, you can see we have not closed outside the range, but it is a bearish candle. So this is usually where I have some conflict, right? And I'm going to let another candle form, but mechanically I would be looking for a move higher. Here we get a move higher. We have a sweep and a close back inside the range. So mechanically looking for a move lower. And you can see it already has failed once, and that is because nothing always works 100% of the time. But as we continue, we now have a close outside the range. So looking for another bullish day. We get another bullish day. We have closed outside the range, so another bullish day. And here is where I start to wonder, okay, we have had this continued expansion for multiple candles. We're closing outside the range. This is where we can enter a new phase of price delivery. We have taken out our high and then closed back inside the range. So with that, I would be bearish. We get a very shallow sweep of this previous day low, and then we close back inside the range bullish and over this opposing candle, because it has retched into a fair value gap, the down close candle into that, so we'll mark that out. But it has not taken this previous day high yet. And so with a bullish idea, it sweeps out this previous high, and then we come back into the range, right? So this would be bearish. But that is why it is important to blend with the phases of price delivery, right? As we go through an expansion, I can then anticipate a new phase of price delivery. If it's not going to be retracement or reversal, I don't want to get caught up in this consolidation. Going through it mechanically, we have swept out this previous day high, closed back inside, so I would be bearish. So I can be bullish because we have swept out this low and closed back inside the previous, and I would want to see bullish price action to the other side of the range. And here with this move to the other side of the range, we have closed over our previous day high. We have yet to close over this swing point, right? So this is where there is a little conflict. If I had to choose, I would be bullish because of this strong closure and candle. And here we get a move higher, sweep out our previous candle's high, and then close back in the range, so it can be bearish, right? And then now we get a move higher. So you can see our trend into our consolidation, our little manipulation, and then we expand higher. I wanted to show an example like this because it is not always going to be perfect, right? I use it many times, but I prefer to blend it with the phases of price delivery to make more sense of it. If I was always trying to short the top of this range in a bullish trend, it's not going to work as well as a sweep of a low in a bullish trend to trade to the other side. So as we continue along with this trend here, we have a closure outside the range. So anticipating a bullish day. Here we have a bullish day that takes out our previous candle's high and closes back in. So I'd be looking for a bearish day. Here we get a bearish day that sweeps out our previous candle's low, closes back in. So then a bullish day. Right here we now have a sweep of a swing point, a closure back in. So then a bearish day. And here now that we have closed outside the range as well as outside our previous day low, looking for a bearish day. Now here, once again, we have closed outside our previous candle's low, so looking for a bearish day. And we sweep out previous candle's low, and we get a very strong close back inside the range, so looking for a bullish day. We have a closure outside the range, so looking for a bullish day. And now you can see we reach back into this volume imbalance or the opposing candle, close back inside the range, so looking for a bearish day. And here we have closed below our previous candle's low, so looking for a bearish day. Here we get a bearish day and we sweep out a swing point. We have closed outside the range, so looking for another bearish day. We do not get a bearish day. In this case, after sweeping out this low, we get a strong aggressive move higher. So with that, could be looking for a bullish day. And here we get a candle that sweeps out our previous candle's high and closes back inside the range. So anticipating a bearish day, let's hop down to the hourly chart to see how I could actually get on side with this move. So here we are on the lower time frames. You can see our candle closure here on the right. And I would mark out this change in the state of delivery here from the high. And that gives me my confirmation to this bias. And if we look, we have a series of candles reaching into that opposing candle and then closing below. This is now a propulsion block, and I would like to see price respect the lower half of this. So if I wanted to get on side on this move, I could really just take a trade at the open or when we make an open high and then put my stop on this invalidation. So if I was to just enter at the open, put my stop on that high, and then target 2R, let's see what happens. And there we go. You can see we put in an open, high, low, and then we close in the lows, right? So would be hitting the 2R or those failure swings from the previous day low and even the low from Tuesday. So that is just an example of positioning myself within this idea. Well, let's hop into a few more examples. So here we are on Bitcoin. I've had quite a few comments on doing examples over it. So here we are. You can see we have swept out our previous candle's low. And that gives me my anticipation for a bullish bias the following day. So if I drop down to the hourly time frame, let's see if we have any bullish price action. So into the next day, we drop lower initially into 0.5 of this opposing candle and get an aggressive move higher. So that would be my indication that I'd want to see an open, low, and then have this price continue to the other side of the range and higher. So here on the next day, after we close, you can see we have closed over our previous candle's high. So I would anticipate that to move higher. So as we let this continue out, we end up just consolidating for the day, which doesn't really give me an indication of where I want price to go. But if I think about this, we have expansion into a consolidation. So I would look to see if we can have some sort of manipulation lower to get on side with a move higher. As we let this go, we don't get that manipulation of the lows. You can see we open up the next day, immediately continue higher. And then we get this aggressive move higher as well. And then back lower. So quite some volatility on this day, and that's why I personally wait for the closures of the higher time frame candle to give me direction. And you can see with this closure, we are closing back inside the range. So I look for price to go lower, right? And I have my change in the state delivery right here. So that is a possible level I could use to get on side with this. Here you can see we get a reach back into that change in the state of delivery or into that order block, and then we have a closure forming a propulsion block. So with this, I could take an entry at the close of this, my stop on that high, and then looking for 2R, or looking to target these lows over here. So let's see how this goes. And you can see we do get our drop to 2R there. And so if we let this continue out, let's see if the lows get taken out. And the lows do get taken out. So as you watch this continue, we had that closure back inside the range, a closure lower with a large wick showing this bearish price action, and then an aggressive move lower that closed outside the range. Now, if you notice on this candle here, we have closed back inside the range. So with that, I'd want to see price trade higher. So if I wanted to get on side on this, if I was in an entry here, I need to have my stop on the low. So we can take a look at how that would work out. So if I'm just in here, as I was a little late on replay to it, where would my 2R be? Right here. So let's see how this works out. And then we have a strong closure in this previous day over previous day high. So looking for this to continue higher. And with this next day, we failed to close outside the range. So we get a retracement or expansion into retracement. So if this closes bullish, I'm anticipating this to be a retracement to continue higher and not a reversal to go take out my stop loss. So we have a nice close back inside the range. So looking for this to continue higher. And that's where I could add to my position if I wanted. And then there we get a move higher through our TP. So let's go back out to the daily chart just to see what this looks like real quick. And you can see what we just went through was this failed to close outside the range, this move higher, this failed to close outside the range, this move lower, this sweep of this low, closing back inside the range, the move higher, and then this was the retracement, failed to close outside the range to move higher. So hopefully that makes sense, and you can see how it is used on the daily chart. However, similar to my fractal model that I teach, this is a fractal concept, so it can be used on all time frames. So let's take a look at using it on the hourly time frame. So here we are on the daily time frame, and you can see we have retch into this order block or this opposing candle. We have had a move higher to close outside the range, and then an inside bar, right? So this doesn't give us much info, but just looking at the individual candle, if you've seen my open, high, low, close video, I view this as a reversal candle to trade higher. So with that, I'm looking for price to go take out a swing point, or at least over its previous day high. So if we drop down to our lower time frames here, or in this case, the hour, let's see how this works out. So you can see we open and trade higher immediately, right? Now we go take out our previous day high, which is what I would be looking for. But just as I view this with the weekly profile, when Monday and Tuesday or even Wednesday trade higher without forming an established low on Monday, this is when I'm looking to trade back to the weekly open on a weekly profile. So it's the same with the intraday profile or the daily profile, looking to trade back to our daily open or the lows because of a lack of a low created off this open. So as we continue, do we get a reversal? Yes, we get a reversal here with a close through this move that made the high, right? And swept out this liquidity. So I'd view this as my change in the state of delivery. Now let's see if there are any failures to close or any reversals to get on side. So you can see if I just wanted to take my CISD entry, that would be possible. But what do we notice right here? We had an aggressive move lower, or an expansion, and then a slight move higher, which I would view as a retracement. Now with that retracement, you can see we have swept out our previous candle's high and closed back into the range. So I would anticipate bearish price action following. So dropping down to the 5-minute, how would I get on side with this? Well, you can see I would use this as my change in the state of delivery, as this is the series or the move that made the high. And we have a nice V-shaped reversal here. And if we have closed below that low, which we haven't yet, then I would be able to get on side. So let's see what happens. Right here, we would be able to get on side as we have closed through, confirming this high. So entering with my stop on that high, looking for 2R. Let's see what happens. And there we go, a very quick 2R. So you can see the same concept that I used on the daily chart can be used on the hourly chart. So if we go back to the hourly here, you can see aligning it with the phases of price, expansion into this retracement, which is paired with the closure or the failure to close outside the range, giving me the anticipation for a bearish price action on the following candle. So expansion into retracement into expansion, right? And so if we let this continue out, we go and make some new lows, but that is just what I wanted to show, that it can be used on the daily time frame as well as any time frame because it is a fractal concept, just as my fractal model shows. Now I hope you enjoyed this video and found it helpful. It is the foundation to my bias. The PDF will be linked in the Discord, and if you do want to learn more about my fractal model, there is a free trial going on currently for the group. I hope you have a great rest of your day, and I'll see you guys next time. Have a good one.